talking about inventories. Now let's talk about perpetual. Remember, under perpetual, when I buy inventory, it's debit inventory and credit accounts payable or cash. And when we sell inventory, there's not one, but two journal entries, aren't there? There's first the entry to record the sale, and that's what? Debit accounts receivable, credit sales. And then there's a second entry that debits the account called cost of goods sold and credits inventory for the cost of what you sell. So let's go back to our facts again. Remember that at the beginning of the period we had 4 units in inventory at $1 a piece. We then sold 3 units, and let's say we sold them on the 7th. So when we sold 3 units on the 7th, one thing we did is we debited accounts receivable and we credited sales for 3 units times the sales price, which was $5. So we debited accounts receivable, credited sales, $15. But then we also made an entry that debited cost of goods sold and credited inventory. Well, under the FIFO approach, what would those 3 units have cost? Well, they would have cost $1. And what would we have left in inventory on the 7th? We would have had 1 unit left at $1. So on the 7th, not only did we record the sales at $5 a piece, but we also recorded a debit to cost of goods sold and a credit to inventory for $3, 3 units at $1. Then what happens, say on the 14th, we go out and we buy 5 units at $2. And what is that entry? It's not a debit to purchases, is it? It's a debit to inventory. So we're going to debit inventory and we're going to credit accounts payable for $10. That means as of the 14th, we have 2 layers in inventory. We have 1 at $1 and we have 5 at $2. We then sell 4 units. Now on the 21st, say that when we sold 4 units, under FIFO, the first goods to come in are the first goods sold. So those 4 units were made up of 1 unit at $1 and 3 units at $2. So what are those 4 units valued at? 3 times 2 is 6 plus 1 is $7. So in other words, when we made that sale on the 21st, we debited what? Cash or accounts receivable, credited sales for the $5 times the 4 units, or $20, and we debited cost of goods sold, $7, and credited inventory, $7. What's left in inventory after that? Well, it looks like we have 2 units left at $2. Then on the 30th, we went out and bought 6 more units and paid $3 a piece. What's the entry? Debit inventory, credit accounts payable for $18. So at the end of the month, until the next purchase or sale, what's sitting in inventory? We have 2 at $2 and we have 6 at $3. So we have a total of, let's see, that's 18 plus 2 times 2 is 4, so it's $22 in ending inventory.